US dollar is under pressure, and it's all because traders are betting big on a series of interest rate cuts by the Federal Reserve. But here's where it gets controversial. While some see this as a necessary move to stabilize the economy, others fear it could lead to inflation or weaken the dollar's global standing. Let's dive into what's really happening. Imagine a currency exchange office in Santiago, Chile, where stacks of US dollars, $100 bills are being counted, a scene that might soon become less common if the dollar continues to lose its grip. On Tuesday, the dollar hovered near a 2.5-month low against the euro and a 10-month low against the risk-sensitive Australian dollar. This comes as investors are increasingly confident that the Fed will not only cut rates this week, but continue to do so in the coming months. And this is the part most people miss. The markets are pricing in a total of 67 basis points in cuts by the end of the year, rising to 81 basis points by January. U.S. President Donald Trump has been vocal about his desire for aggressive monetary easing, calling on Fed Chair Jerome Powell to implement a bigger rate cut, specifically pointing to challenges in the housing market. But is this political pressure influencing the Fed's decisions? That's a question sparking heated debates. The driving force behind these expectations? Rapidly softening labor market data, which has pushed traders to ramp up their bets on rate cuts. This has led to a weaker dollar, lower bond yields, and soaring equity prices, with Wall Street hitting new highs on Monday. Chris Weston, head of research at Pepperstone, notes an increasing view that the Fed is behind the curve and needs to act urgently to bring rates to neutral. Here's the bold prediction. The consensus is growing that the Fed will cut rates not just in September, but also in October, December, and possibly even January. But is this enough to address economic concerns, or are we setting the stage for future instability? That's the million-dollar question. In the currency markets, the euro held steady at 1.1765, close to its highest level since late July. Sterling remained firm at 1.3605, while the Australian dollar stayed strong at 0.6672, near its highest point since November. Meanwhile, the US dollar was flat against the yen at 147.42. So what do you think? Are these rate cuts a necessary step to boost the economy, or are we playing with fire? Let us know in the comments. This is one conversation you won't want to miss.